Good morning, hello and welcome everyone to the first installment of the iGraphics Executive Webinar Series, Enabling Business Innovation and Transformation. My name is Linda Holz. I am responsible for Marketing and Communications EMEA at iGraphics, and I'm really pleased to host today's webinar. The focus of this webinar is on the banking and insurance sector, for which we have also prepared a practical example for you. And I'm joined by my colleague Stefan Hessenbruch. He's a Manager Professional Services at iGraphics, and Professor Mark van Roosing. He's founder of Leading Practice. Today's session is being recorded, of course, and you will receive links to the webinar and the video afterwards. Should you have any questions during the webinar, I would like to ask you to write them below in the questions window, and we will read them at the end of the webinar, anonymous of course, and answer them to you. So let's begin. So as I mentioned, today's session is the first in a webinar series hosted by iGraphics. It's important to note that these sessions will a bit differ from some of our more product-centric webinars. This series will present concepts that are meant to enhance your way of thinking about how your organization performs and what you can do to improve business outcomes. So today's webinar intends to explore the fundamentals of business innovation and business transformation, research findings of what successful organizations do stay on top and makes them an outperformer, when it's best to innovate and when it's better to standardize, and finally we will dive into a concrete example you will all relate to that highlights the benefits of business modeling to support transformation and innovation. So before we dive into today's topic, I'd like to introduce Professor Mark van Roosing to those of you who don't know him. So Mark is the founder of Leading Practice. This is the fastest growing open standard and open source community dedicated to developing enterprise modeling and enterprise architecture frameworks based on leading practices. Mark is Mark is lecturer at various universities and head and founder of the Global University Alliance. Moreover, he is a partner to major BPM vendors that have adopted lead principles and modeling practices. And he has been especially involved in the development of SAP's various business architecture and BPM frameworks and internal lead certifications. And Mark is a published author of a number of books on, for example, business model management or business process management, and he is co-author of Applying Real-World BPM in a SAP Environment. So it's a really big pleasure for us to have you here, Mark. We thank you very much for that, and I would suggest that we just start. So I hand over to you, Mark.
Thank you very much. That is very kind of you. I'm pleased to be here with everybody and have the honor to do this session together with iGraphics. So, as you know, the topic of today is business innovation and transformation enablement. In this perspective, we have the first thing we want to cover, and you will actually see later on why, is a little bit of the basics. And which we only have one slide covering. So let's cover what is innovation and transformation. Innovation comes from the Latin word innovare, and transformation from the Latin word as well, transformatio. And today actually all European languages, including the English-speaking languages, which are European languages as well, actually have this word, innovation and transformation, in all the different languages. It doesn't matter if you are talking German, Danish, Swedish, Norwegian, French, Spanish, Italian. All of these words have the same basic background. Let me tell you a little bit why and what the importance is of this meaning. Innovation is the act of creating and introducing something new. Now, where we often see this goes wrong is that somebody thinks that improving something that already exists is innovation. That is not right. As it states here, this is from Oxford Dictionary, innovation differs from usual improvements in that innovation refers to the notion of doing something different rather than doing the same thing better, more improved, or optimized. So, transformation on the other side, that's actually when something exists. So you are making a change, an alter, or you optimize it, or you improve it. This can be in appearance or in character, or actually both. So you can add features and functionalities, and you can say, well, that was an innovative way of doing it, but it would still be transformation because it already exists. So transformation is to make the change to something existing. So if it already exists and you add something to it, it's under the subject of transformation. So when we use effectiveness and efficiency and optimization and improvement, these words fit to transformation, because I can only make something effective to something that already exists, meaning making it more effective. So just for us to have this in place, we will go through these examples today. We will use the banking and insurance industry, and in there we want to talk about the external drivers and internal drivers influencing change. This is very important because what most don't consider is why is it I need to change? What kind of influencing factors happen? What's the pressures for change? How do I react on those? Then the influence always happens to your business model. So the influence of where and how you do business. That is your industry. This is something to do with core competitive and core differentiating aspects. Then how this impacts to what you do, meaning your process models, your workflows, and thereby the very performance and the value you create with it. We want to then deep dive down to a call center example within the insurance and banking industry, and how this fits together with decision making of transformation and innovation. And we show real life examples within iGraphics. So I believe you have something exciting to go through today. Having said that, let's jump directly into some of those external market changes, meaning the external factors and external drivers. There is 4 main drivers that are generally that we want to kind of mention. We see there is changes in the market. Organizations today in the finance industry, and I mean around the world, they try to manage the change from the outside in the markets that happened, meaning we either have growth or we have recessions. We all know that this is a cycle between 6 to 7 years. So there's widespread changes and thereby pressures to a business model, which the middle should represent. I will define that later on. So we today see trade and financial market liberations. We see a widespread ongoing IT development in order to actually fulfill this new sophisticated way of how to do and deliver financial services. Then on the right side you are seeing, we see drivers within the financial players. So we have a whole new way of how they are working in the market. Sounds Bank and global banks are merging. Furthermore, smaller banks are merging. New markets are emerging. Why? Because customers have new demands. This is on the left side. They have new drivers. There is new competition. They expect better quality. In this case, we have even global players who suddenly in local markets they play a role. So new markets are explored on a worldwide basis. Not to mention and to forget the regulators. We have requirements, compliance aspects, and legislative aspects which actually impact the way these organizations do business today. So it increases cross-border issues, it encourages competition and innovation. However, it is still very challenging to actually keep compliance in all the different regulative requirements that they have through the countries. There's two aspects we want to deep dive into. That's globalization and growth and technology. This is something we see as mega trends. The other ones we mentioned are the external drivers that are more driving forces. Here we see two mega trends. We see globalization and growth today as a #1 driver in all financial industries. So there's internationalization of the marketplace, competition between the domestic and the foreign players. We have global players entering, as I mentioned. We have the profit growth in mid-markets is expected to that's going to be challenging, but they will have growth with a strong growth potential in the newer emerging markets. That's why they start to go to these markets. Growth in offshore wealth management areas. In terms of technologies, there is no question. We all know that technology is a main driver today and fulfilling a new need. So it's requirements of real-time systems, financial transactions commoditized. What was before siloed needs to be more integrated in order to fulfill a customer workflow, a service flow. So it's a whole new way of how data, information, and knowledge needs to be accessed across departments and areas. For this, we will go through a business model. Let me describe very short for you the way we work with business models. Here you see an example of a business model. It's a simplification. Obviously, a model always is a graphical representation. In this case, you actually see the business areas on top. This is financial banking. So you would see the business areas and groups on top. And then all the different competencies of the bank would be divided and categorized into strategic, tactical, and operational competencies. So I would see which of my areas are more strategic, are about planning, are about forecasting, are about budgeting, are about value management, and which are the tactical, meaning what is more about control, governance, administration, in this perspective, evaluations, audits, monitoring, performance management. These would be more on tactical level. The same way you learned in the university, difference between strategic and tactical. And the operational is always about the execution, meaning the delivery of operations, as the word already says, operations. Within here we will have different business models. So this is one from the financial banking. We do understand that there are specific drivers for the different business models. Here we just mentioned, we see today that investment banking and commercial banks have the following things in common and where they start to compete. Within investment banking, trading and principal investment, and asset management. This is an aspect where we see the competition happening in the market. So markets are emerging, and niche markets, also called by those who know a little bit about strategy, blue ocean areas, are actually explored in order to capture some of the value and the growth potential within it. If we see here, this is not a beautiful slide, it's a busy slide, but let me explain of why we took it. This is kind of to explain the different drivers we see in the market happening today. So the first wave, increasing customer access options. This is kind of like, we already mentioned that was a mega driver. So the customers want new services, they want faster information flow, and they want better access. That was a customer driver. We all know that technology is an enabler, so all financial organizations start to fulfill this need today. and they want to explore different markets. So right now we want to put all the different mega trends we discussed in one slide and discuss it. So they want access. The typical access happened to branches before. The financial industry still will have that. And it went through ATM machines, or POS machines. Actually, you could be at a postal office or somewhere else we're doing it. Today it's done over the internet as well. You can buy things and use your banking abilities over the internet. As a whole new first bank got last year, one of the most innovative banks of the world, due to the fact of their phone and mobile advanced solutions they had. So in this case, we know there's happening a lot in mobile banking and phone banking. And there is lots of new ways of third party that is involved, that starts to have integrated banking aspects, or starts to be loan within a specific areas of farmers or other areas where they are specializing. So for this, the second wave, we see in order to fulfill that customer access demand, it needs to be re-engineered, the business processes and the service flow. The products between savings, credit card, home loans, investments, insurance, etc., etc., etc. needs to have a flow between how these transactions, checks, statements, the loan processing, the asset management is actually happening. So we see that there is new priorities of distribution channels. There needs to be new web enablement. There needs to be co-branding between different products and your alliances and retailers you have, and maybe even third party, including to that aspects of this needs to have a service flow and integrated, and others need to have an information flow integrated. If this wouldn't be all simplistic or challenging enough, we see that outsourcing starts to be a major player in the market. So suddenly certain solutions are outsourced or certain solutions are bundled. So, having had this in place, let's move a little bit more into details. As you are seeing, we are digging more and more into some of the views of your challenges in the financial market. Here we would like to discuss an insurance business model. So you see the same thing on the top. You would have here the different business areas and groups. You have again the competencies of the insurance organization split to strategic, tactical, and operational. This I've developed. This is a generalized one, but it was with help with lots of insurance companies. For those of you who might already know it, we have in the leading practice community actually an insurance user group and a banking user group. So in this case, this is where we actually develop these assets that can be reused again by the others. So this is a simplistic flow we are seeing of claims handling. So we see here number one, the customer calls in to the customer service, receives an incoming phone call from a customer about a property claim. Now the flow goes over to customers forward to P&C, meaning the property and casualty operation support, which then does the following thing: passes on for possible fraud investigation, saying, we had this guy calling in 2 other claims this year. Does this make sense? So you would have a flow within the business model that you see, and you actually see here when is it a service flow, when is it a main and supporting service, when is it simple services for the organization, when is it a complex. So you would see over here in P&C risk management it would be complex services, and they do already know when is it that they actually have a flow between the areas, which is between customer service, operations support, and claims handling. The reasons I'm already introducing this, we will later on see how we will work with flows, both process flows, service flows, and information flow. This is something Stefan, who's co-presenting with me from iGraphics, will go into detail and then actually demonstrate. So we do see today the businesses have lots of challenges. They have new things of where multiple departments needs to be integrated. The manual way and the siloed way of doing business does not work anymore to fulfill the need of information at the tip of the hand. If it is on internet, if it is over the mobile phone, or if it's at the branch where I'm actually in, I want my information at the fingertip to be available quite quick. So I would like to discuss with you a little bit investigating about the changes and how an organization can react to it, or how they do react. For this, we have developed a simplistic model, actually showing time here on the bottom and the market changes on the left here, on left top. Market changes low and high, and this is time actually then high. For this is inspired by our Danish physicist Niels Bohr. I'm from Denmark, so obviously we feel very proud about Niels Bohr. And he had something called how we meet a paradox. Furthermore, the model is inspired by the corporate strategy Johnson and Scholes and Whittington. When Niels Bohr and Albert Einstein met, Albert Einstein had troubles of quantum engineering and quantum physics in mechanics, and there Niels Bohr, he put his hand on his shoulder and said to him, "Albert, how good it is that we have a paradox. This means that we can finally find a solution." Albert Einstein, he laughed, and Niels Bohr became prominent for that saying. If you actually Google Niels Bohr on the internet, I'm sure you will find that quote all over. It is one of the things that brought these two together, and Niels Bohr actually became the very right hand of Albert Einstein. And I want to discuss a little bit of the paradox we have in the market and why we see lots of organizations actually fail. So, if there is small changes in the environment, it's okay that an organizations with their normal continuous improvement, meaning Lean, Six Sigma, business process re-engineering, the different optimization approaches, continuously adapt to these changes. However, have a challenge. There is a gap in the market, a problem, a challenge, when the changes starts to become stronger. This means I need to have significant transformation in the organization. It's not okay anymore only to do my adapting slowly over time. I really need to start to have some transformation projects. Organizations gets reorganized, people gets reallocated, maybe jobs get reallocated as well as new flows are merged and defined. In this case, we see the big things, and the challenge is if the market changes and some of the drivers again are stronger, I again come into a paradox where my way of adapting to the market and the way the market has changed is not equal. This means if the changes are larger, meaning I have really big changes, from the significant changes in the medium to the large changes, I need to have a fundamental change in the organization, meaning I need to apply both transformation and innovation principles. So, what can we take from this? Continuous improvement initiatives you have in your organization, yes, they can fulfill and they can adapt to the outside changes that are small. If there are medium changes, meaning more significant changes than the smaller ones, you can adapt to transformation. If the significance increases to fundamental change, I need to apply transformation and innovation principles. We have taken 3 quotes that we would like to go through with you the reasons why this is so important. The first quote is from OECD. OECD is the World Organization for Economics and Welfare and World Organization. In this case, they have done a projection which I believe it speaks for itself. They say, due to the lack of adoption to change, 55% of the current Fortune 500 organizations will not be in the Fortune 500 elite by 2025. Whoa. I mean, imagine this. I mean, the top 500 organizations, they have the size, they have the money, they have the customers, they have the brand, they have the products, they have the retailers, they have actually the resellers, they have the partnerships, they even have the technology. Why to be on the top? They are already on the top. They have a differentiation. They already have a competitive advantage. Why in the world is it that they can't keep this? Well, it's actually exactly the thing we are discussing. They are applying one of the two principles lower here. They haven't realized the paradox. They are not adapting to the change. And failure to adapt is on the highest ones. If I need to apply innovation principle and I'm not applying innovation principles, I'm actually losing aspects of competitive advantage. Second quote we want to take is from IBM, who we believe understand this principle very good. We all have seen IBM from the 90s re-emerge when Lou Gerstner came up and changed the whole way of how to do business. We've seen IBM re-emerge into the markets. And by the way, IBM proves it themselves. If you look at the stocks, how IBM grows in recession times, it's amazing. IBM knows this principle. They know they can't optimize themselves out of a crisis. Market changes come due to the fact that I need to change. I need to adapt. You can't save costs to just come out of the fact that you actually need to adapt to change. So IBM CEO study, the 2012 CEO study, concludes that 86% of executives actually say that innovation is extremely or very important to their company's growth strategy. Meanwhile, only 19% feel that they succeed with any aspects of it. Wow. I guess that's kind of like a pretty good proof of what goes wrong. This is parts of these discussions we have here. Supported very good by the last quote we will have, the McKinsey study. The 2011 McKinsey study on transformation identified that 72% of transformation programs fail to deliver their actual targets. Well, this you can then see that actually results in a substantial economic and productivity loss of over 3 billion. That actually corresponds to 4.7% of global GDP. Just as a side note, not important in this presentation, but that means that actually we could solve world hunger and world famine with the very aspects of projects that fail anyway within transformation. So, but I mean, we all know that's not how it works. That was just a side comment. So, for me, all of these three quotes give kind of the same perspectives. McKinsey says which fail. IBM says which actually works out. Gives the same perspective of it. And the OECD study actually mentions what will go wrong with the organizations if they don't adapt. So, if we take this to our financial world back, here we have a source from Mercer Oliver Wyman, very good analyst. We like his prognostications. He says within the next 3 to 5 years, who are the losers and the winners? Again, we know this is a prognosis. So it's always the aspects of saying this is not a fact, This is what is prognosed to be, it's most likely to happen. So who could be the biggest winners within the market? Standalone private banks have the chance both to be winners and losers. They have a pretty good chance in the market to fulfill the full palette of financial and wealth management. If you are then, and this is for Europe, please note this is not for US. This presentation is specific for the European market, tailored what we did. Private banks, parts of the larger banks, clearly have a big potential to really win a lot. They can gain a lot. So retail banks, we see they are under threat the way they do their business model. They need to rethink and have a lot of innovation. Transformation on itself will not be enough to fulfill this need. Investment banks, you are seeing here, they can gain a lot, and to gain little is kind of like, so they are quite good in the market as well. They have a good potential. Insurance companies, and for those of you who are in the insurance business know, you are under heavy transformation. Literally, the market, it is merging, it is consolidating, you are rethinking your systems, your flows, which I know, I mean, we have a session, we have so many people alone on this call, that proves the very aspects. That's, by the way, why we did this call. Stockbrokers, their business model, and the way they have done it is challenged this way. They need to rethink their portals that they are using. This is one of the reasons why organizations like Saxo Bank has become one of the top 500 organizations. They actually do platforms for stockbrokers and others. Help them rethink their business model. So business model in this perspective is quite important, and rethinks it. And in this case, this is a Saxo Bank mentioned was a technology company helping the organizations then to rethink their platforms and thereby the way of doing business. Again, going back to the mega trends. So then we have the independent financial advisors. They have a lot of potential here. Why? Because the organizations, they actually expect trusted advisors. But they are very critical, so they do have a potential, but they need to rethink their business model too. That was a little bit more specific to your world right now. Let's go into some of the things that we saw happening in the market. I would like to share, or we would like to share with you right now, how we have seen these organizations change and adapt. I know most of you will be saying, okay, most of this I already knew. I want to know, how can I adapt to the market? Let us share with you how we have seen those organizations where it was good, what they did, and how they did it. So let's jump into it. For this, we first want to share with you the strategies, meaning the why and the direction, and then we want to share what did they do with their business models. What kind of principles did they apply? So let's start with the strategies. Here is analyzed the top strategies that they actually used. We have seen that these organizations adapted with it. By the way, you will see in the very end, Linda and myself will actually mention it. We are happy to share this information with you. This comes from the Global University Alliance and the leading practice community. We are an open source community, and in this case we are happy to share this with you. So you are seeing the top strategies that apply. We have customer interaction. This should not be a surprise because it's a mega trend. Strengthen innovation culture. Then we have expand the service and product portfolio. That means that they need to change the operating model. The blue here means they needed to improve their competitiveness. So all of these strategies actually have an underlying strategy as well for it. So this is really, really deep stuff that is there. I believe you could be using this quite good in your organization. If any of your organizations, and Linda will actually give this offer, as any one of your organizations wants to benchmark according to this, we are offering workshops, in this case from the leading practice community, from the insurance and banking user group, actually for free together with leading iGraphics for you in the case you say, whoa, I would like to get a view of this. So these strategies, however, the real questions we have most of you asking is, how can I apply this? Yes, we have strategies too, but we don't know how to take it from strategy to execution. I don't want to go through this, how this is done. I will ask Stefan Hessenbruch, our colleagues from iGraphics, who will present this. He actually will show it, so we don't only say it, he will actually show how do you capture a strategy, how do you relate it to different business areas, how can you put it to the responsible people and put the right critical success factors to it, etc., etc. So Stefan, I give over to you where you can start presenting this in iGraphics from strategy to execution.
So, thank you, Mark. I'm showing here an overview of a typical process management system as you might already have it in your companies. It's a graphical representation of the process landscape, and I can drill down here to other levels to show the details of the processes and so on. Now, how can we work in that environment with the company's strategies? Well, within iGraphics, we are doing a lot more than just a graphical representation of processes. So on the left-hand side, I opened here an Explorer that also gives me access to several object types that we have modeled in our system. So as you can see here on the top, for example, for the strategies, I have a hierarchy of the strategies the company wants to follow or that was defined for the company. Let me drill down here in the financial section. As you can see, it's a hierarchy that can be very deep, so you can go more and more into detail if that is needed. And in here, let's have a look in financial reporting. You will see that goals are defined as a successor of this strategy. Now, every object you can see here has some relationships, and as I click on the goal, financial disclosure requirements, and so on, you can see here that this goal has a connection. It is a goal for these business rules. And there are requirements that needs to be fulfilled when we want to reach that goal. Now, where are these entries coming from? These are other object types in the same database. As you can see on the left-hand side down here, we have a list of requirements, we have a list of business rules, and also the process landscape in objects again. So every diagram that we have is connected to one of the objects. And if I drill down in the process object tree for develop vision and strategy and go on develop corporate vision, you can see on the right-hand side a diagram that is connected to it. If I go on the top level, it's the whole diagram here. And the other relationships to the process object is here. And as you can see, the strategy maximize corporate value is connected or has a relationship to this process object. And it supports a PCF process from that framework. I can see who is responsible, who is accountable for that process. Because this is an object and has relationships to other objects, it is very easy to switch the view. So if I want to learn more about that company strategy, I just click on it, and now I have the view of the strategy and can see where this strategy applies to which other processes, what goals it contains, and so on. So the whole database is object-oriented on that part. We can have relationships between objects, and this is how it's very easy or how it gives us an instrument for analysis that you can't have if you only have a graphical representation of your world. Now, how difficult is it to model these relationships? So let me just jump in the authoring tool. All you've seen before was in the web browser that gives us easy access to the information. This is the authoring tool, and if I open one of the processes here, so for example, identify business opportunities or develop corporate strategy, maybe let me go into manage financial resources, perform revenue accounting. Now I go in the properties of that object, get the site. I can, for example, see this object is supported by an IT resource, but I wanted to go onto the RACI. You can see that a CEO or CFO is already connected. So let me drill down, invoice customer. Now I found an object that has no accountable person connected to it. I want to add that relationship. It brings me back to my database with the resource model, and I can easily find something I'm searching for. So I would like to have the CFO, Werner Bruno, in that case. I click on the person, so I don't want to have it unspecified, and click OK. So now you can see that we have created a multiple relationship because I defined that the role is accountable for that process, and the person is through that role connected to this process. So all the possibilities in the tool give us easy access. Also for the authors, it's very easy to create these kind of relationships, and on the web page for everyone who wants to inform themselves, it's very easy to find the information, to see all the relationships, and have the graphical representation of whatever is connected to the process right away. So this is how iGraphics is doing that, and back to Mark.
Thank you, Stefan. This was wonderful. I am sure that nobody is in doubt of the powerful message that we just saw. Let me recap very short what we did see. So we saw how can an organizations, if they do have the strategies and the underlying transformation initiatives, how can they actually apply it? You can apply this in multiple ways. If you actually get the strategies, you can apply it to who has these strategies, meaning you can apply the RACI aspects. I can furthermore apply it to the business areas. I can define critical success factors for there from different departments. So I can identify from a business architecture perspective, where do they conflict? I can actually from an information and an enterprise architecture perspective see where is which KPI applied, where does it relate, where does it possibly have some conflicts, and where do I don't actually have a strategy to execution, meaning in which areas doesn't it reply or apply to a process. So you can actually drill it down from the very strategy to the business areas, to the responsibles, to the resources, to the KPIs involved, including to the processes and the tasks, and who would execute it. This is the only tool in the market today that does this from the top of the strategy to the process. At least if you are aware of any other tool that exists, we would be happy to, from the Global University Alliance, to work with that. But we have with iGraphics actually to help them develop these aspects because we saw this missing in the market. This is then a tool that you can share between process people, business analysts, business architects, and enterprise architects. Finally, they have a tool which they can work together. We will see more of this. We want to jump to right now. We want to proceed with our presentation. We have more to present in the next 30 minutes before we are finished. So one of the things we want to look at is some of the findings we had from the close to 2,000 CEOs and close to 3,000 business leaders representing all different countries. What is the reasons that their transformation initiatives didn't work? The first two, actually, you will see that it goes about they don't know the difference between innovation and transformation. That one we already did in the very first slide. Secondly, they don't know where to start. The next 5 is actually more about that they don't know how to go about it. It's a mismatch between internal skills who could be doing it, between management bandwidth who have competing priorities, a culture that doesn't know how to go about it or doesn't share that information, unclear ownerships, and lack of executive sponsorship. So the first two is, I'm repeating, no clue what they do or how they go about it. They do have a clear, we want to do something. The next 5 is the difficulty to actually anchor it in the organizations. Now here comes the 8th one, which still is in 21%. You will have multiple concerns and the organization doesn't know how to do problem modeling, pain point modeling. So they don't know how to start with concerns. They don't know that these are low-hanging fruits, the opportunities how to go about it in a fast way to therefore get fast transformation benefits. And the last 2 is actually more about, because of all the top, they actually think that the cost of doing would over exceed the value of getting out of it. And therefore they have no case for change. As you see, they kind of build upon each other, all these points. So, what we want to share with you, now we shared the strategy, and Stefan Hessenbuch impressively presented to us strategy to execution in such a short time. This is very impressive, and if anyone wants to see this in detail of saying, we need to go into this, I am sure you can reserve such a time to get their singing and dancing show of that aspects. We want to show and share with you right now how did the organizations that we analyzed, the top 500 organizations, and all these CEOs that we benchmarked with it as well, over the close to 45 years, how have they adapted to the market, both in crisis time and recession times. For this, we will look at 2 aspects. The stock cycle abstract of the top 500 organizations, that's the red line, meaning going up and down, and then you see the economic cycle time, meaning the economics, including their revenue and their profits. How have the organizations been doing? As you see, crisis largely impacts us, so does growth. So they actually go between growth and recessions. So let's take a look at what they've been doing. Not a big surprise is that this goes way back into the 70s of the oil shock crisis. Not a surprise is the cost model. Organizations, the #1 strategy applied is cost savings. This is not a surprise, and it is not wrong. But we saw service modeling appearing, meaning organizations starting to apply different service principles to the market. In addition to that, we saw, and it took over 10 years until organizations, this is when Porter started to be around to write about the competitive advantage of nations. They started to do revenue modeling. They started to look at differentiation. So we all knew that cost was already an aspect of your strategy. We all know the service to the market was a strategy. And here it was, you can actually model your revenue model. You can adapt new services and provide new things to the market and thereby improve your revenue model. So principles like this are applied. We see them everywhere. We saw them again in the next crisis. Surprisingly, for the first time, a principle was applied by growth. This should not be a big surprise because this is based on some of Porter's and his value chain. He thinks of it. The value chain of Porter, by the way, is not a process flow. Yeah, we are always surprised by the people to kind of show that. That's a business flow, and it's a business model. So the value chain view is the highest level of the view of a business you can have. In that perspective, he says you need to look at the flow to the customer and to the margins and the revenue you are doing. That brought a whole new thinking to the market. In the recessions that then followed the global recession in the 90s, we see a new thing appearing that is performance model. That was driven by Michael Hammer. Many of you will know his name. He's known in the market. He's long dead, but he's one who revolutionized the whole thinking about how to work with the way of your organizations. He did business process reengineering and business process engineering. From business process reengineering, as well as lots of other principles, came actually the whole Lean Six Sigma. It's related to Toyota production systems and Motorola production systems too, as we all know. But this is interlinked, including with just-in-time productions, TQM, etc. Everything that kind of in the 90s we had really, really big was influenced by Hammer's idea. Again, he looks at performance. He was the first one to say you need to look at performance to increase your service to the market and improve what you do and how you do it. This led to actually that value models started to appear. This is in the end of 2000, but please look at this. Now these principles were all applied for growth. The new dot here we see here are value models. If you remember the .com boom we had, they brought new models to the market. This is where business modeling became a huge discipline. So, value model and how you bring your value to the market is a part of it. Today, all organizations, that's a part of modeling. And in the crisis that was followed by the .com, when they actually fell, so it's here left was the rise of it, and here the fall of it. You see the principles multiple times applied. Now you see you could actually apply value modeling within crisis times too. So cost modeling, revenue modeling, as well as value modeling. And as a new discipline we saw in the start of the 2000s, they looked at their operating model. There's a great book on it from Enterprise Architecture as a Strategy by Gene Ross and lots of others, good writers, who actually talk about the operating model. It's the best thing of the book, I personally believe, where they said it's the matter of the level of integration and the level of standardization, how you go about it, and the architecture you do with your processes. So they combine process modeling, architecture, and level of integration and standardization of your business and your operations. So it's very fascinating, very good. For those of you who want a summary of it, I'm happy to send a short presentation of how to apply the principles. So next one, we saw these same principles applied, but we didn't see a new one in these crisis times. They are applying the principles. So we conclude thereby we see the following 6 models appear in the market. We see value model, revenue model, and service model. The principles applied within there are furthermore performance model, cost model, and operating model. These are, if you look at it, and I'm an engineer, if you look at it from an engineering perspective, it is the 6 things you actually can model with, the 6 things you can actually sit and screw around with in order to say, that screw is not tight enough, let's look at this, how can we improve this? So it can help your organizations rethink how you work. In this perspective, innovation is more applied in value, revenue, and service model, while transformation is more applied on the bottom principles. Please note, we are not saying that innovation cannot be applied on the bottom models and transformation not on the top. We are actually saying both of them can apply in all of them, but innovation is more applied on the top models and transformation on the bottom models, which is obviously, where is it that I differentiate? That is within my value model and service model and revenue model. Hence, this is where I need to innovate. I can not only optimize where I actually have a core competitive and core differentiating advantage. You can't optimize that. You actually need to innovate in that space. Hence, it's naturally that would be within here. We see these principles, by the way, applied often very wrong, resulting in devastating solutions, including when you implement big, large ERP systems. They would be mostly based on best practice. Hence, when you apply it in an area where you are unique, you actually destroy value. So, just a link and a little bit thought for process for the future discussions. So we see the wealth management industry totally changing from product sales force and secrecy and asset preservation and property of products and investment focus and stocks and bonds and transactional pricing that is and fragmented work in domains. We see it more to trusted advisor, value-added solutions, an open architecture, fully client-based, consolidated, integrated, parts of onshore areas and working together. So we are seeing actually this is applied within it. Those who actually prevail with it very good understand these specific, here it's the service model, and here it's actually, I'm thinking of a value model to the market, to the customer, and that is therefore for growth. Oops, these are for cost, therefore I integrate or standardize. And it still helps the operating model and how they actually support growth. Obviously, this is more interlinked than this is just an introduction. So, if we apply these principles to the business model, here we saw the same business model we already saw before. You have the business areas on top. You have the strategic, tactical, and operational competencies. If we are looking at the 6 different business model domains, what I can apply, if we populate it and look at the potential for performance, cost, services, operating, value, and revenue, you could get such a, let me say, heat map, where you say, in financial policies and plans, I had my performance opportunities, and thereby I have actually, this gives links into costs, whereby they said, oops, here in our business unit tracking, this is where our core competitive aspects are here. This is where they actually say, here we got to watch out. Here in research planning, they are core differentiating competencies. So you need to actually watch out not to apply best practice here. You need to apply innovation principles and integration and standardization to support that. Within this scenario here shows, not as a surprise, that call center had the biggest opportunities. Could be another one too. This is just our scenario. This is actually a real life scenario we have done, but we have generalized it for you guys. So within a call center, if I focus into the call center business model, so before what I saw here on the red box, if I right now zoom into this, I would see the specifics, potentials I have within the call center. So I have I have integration opportunities here. I have TCO opportunities in market research. I have unique services in user awareness management. I have in my solution and service delivery, I have cost opportunities. So you see there is actually potential across the lines. We went then to a flow, the same flow you saw before of claims handling. We looked at it, a flow in terms of the flow, how it goes into an organization. And this flow, we looked at it from a process perspective, saying, what's the things that are common here? So we looked at some of the potentials here and said, what could be optimized here? What's the transformations? What were the strategies? What is it they needed to do, and what is my potential? And for this, I would like to give over to our colleague, Stefan, who actually in iGraphics wants to present what's the potential, what can be done. So I'm handing over to Stefan, who right now will show us from and in iGraphics how can this be modeled. Stefan.
Thank you very much. So I'm sharing my screen again, and yeah, what I want to start with is in here. So the example that I want to talk about is from the call center. We did several projects already. So one of the biggest ones was with the government of Canada, with the Human Resources Department and Skills Development Department, and it was really great to watch how the leading practices got into action there. So of course I can't show you any of the governmental processes, so I would like to talk about one example from a bank. It's a neutral example right now, and yeah, let's start with that. What's the initial problem? Now, the bank is getting excessive complaints from call center customers. This reduces customer satisfaction, which lowers the customer loyalty and damages the brand. And therefore, the complaints are having an impact on the organizational strategy and its success. The bank has researched the call center best practices and decided to build on those and apply their own leading practices to reduce that complaints and improve the customer satisfaction again. Oh, I was a little too quick here. This will be accomplished by improving the call center in two phases. The first phase enhances the call center process to identify leading practices that are crucial to the second phase, implementing changes that make the call center more efficient and more effective. Here is the as-is call center process flow as the bank was living it for quite a while. So the swim lanes represent the departments, and the shapes, of course, represent the activities performed. Unfortunately, in that current process, it does not include any activities that provide the necessary operational information to be able to understand how the agents perform their work and what actions are correlated with viewer complaints. If I put that into the business model of the call center, this knowledge gap is visible by mapping the existing call center activities to the call center business model that Mark showed a little earlier. The process flow activity shapes are overlaid here to make understand how the competencies are covered. Notice that only a few competencies are addressed, which I've listed in the second column here. And the Global Corp Bank is of course, not satisfied with this business workflow and will change their processes to identify leading practices and facilitate new business opportunities. The improvements should promote new business capabilities with their existing business competencies and thereby extending the cross-workflow and adding value to the new capabilities and processes. Recall that the phase 1 plan is to improve the process to capture operational information. The bank uses iGraphics to model the planned changes, and new strategic activities are added. You can see that highlighted with the color here, to provide information necessary to perform transformation and innovation. For example, new reporting activities now capture details on how calls are resolved. A new automatic service reports how customers react to the process. So we don't want just to wait until complaints are arriving. We would like to get the information from the customers right away after the call. And data on decision making is gathered where these activities take place. We use the extended BPMN notation to improve the process map. Extended notations include the reporting task type, so as you've seen it here, automatic service task types, and decision table task types. If I go into the properties of a shape, so in iGraphics it's more than just a shape, it's a real property-driven activity, and as you can see here, we have a lot of the standard BPMN task types available, as well as additional task types that we invented to fulfill the needs that we were given by the leading approach. Okay. In addition, the extended notation is also used to add information and business artifacts to the flow. So as you can see here, issue, resolution, a survey, a message. So this is to improve the understanding and clarity. The activities and artifacts are available in the BPMN palette of the standard iGraphics tool, so everything is already available for your use. After the changes were modeled, these modifications are implemented to capture this additional informations that we need for the operations. Now, this leads to some news. The new capability provide real-time measurements. Because we measure the data in the real-life process, we can access that data, and as shown here, we can see the data in the tool iGraphics Performance Central. As an example, we wanted to have that for phase 1, and before that, all we could see was the number of complaints per 10,000 calls. After we changed the process, we can now see the complaints among the agents, as you have it here, following the leading practices, which is down here. Additional measurements, I have some in here. Disclose the leading practices come from an enhanced decision making by the better trained agents, and the other agents from the first level we can see here. So it's very clear that the leading agents, or the second level call center agents, have more success than the other ones. The goal is to replicate the capability across all the resources and their activities to get the total ratio down to the ratio of the leading agents. The operational data visible in Performance Central provides us a new capability to do what-if analysis and a simulation on the call center. For example, duration times can be entered in here. So as you can see, what we found out from the data we gathered, we put it in here with duration times for activities. So here it takes 4 to 8 minutes, here exactly 10 seconds, and so on. So this was modeled, and the complete diagram with all the data was prepared for a simulation. The analysis also showed that the resolution rate was increased from 75% to 90% for the second level agents. Now, if I run the simulation with the as-is scenario, which I can do in a trace mode, so you can really see how calls are coming into the model, how these calls are processed. I can see the duration times, if waiting queues appear, all that kind of stuff. Now, I would like to stop the trace view because I want to see the real data, the result of the simulation. So I just started without trace mode, and I'm getting into the reports section of the tool. So the bank wants to know how much this increase, if we adapt it to all agents that we found for the second level agents, if we roll that out for everyone, how this affects the process. I modeled the issues resolved, the percentage, here in the simulation as an attribute, and now I would like to change that attribute to 90%. So we adapt the activity and how they do the process also for the first level agents, which should give us 90% issue resolve rate. Now, if I run the simulation again, this time I want to append the report to the existing one. I can see what will happen, and as you can see here, the what-if enhancement shows that the improved process and thereby the business workflow should reduce complaints by almost 30%. So this is one of the benefits of having a tool that allows different transformation and innovation scenarios and validating them without performing time-consuming and expensive tests on the real-life process. Nothing is more complex and expensive than disturbing a real-life process for just doing a test if this works better or not. So it's a very good possibility that you have with the iGraphics simulation, that you can do that in an isolated environment and you can test anything you would like to. After the findings were implemented in the real-life process in the bank, we tracked the data after the change, and as you can see here, in about May, that change was implemented, and then the complaints really dropped down. So the new process and its enabled new capabilities brought us the better results, as it was proven here. So the measurements confirm the reduction. The process improvement is now better aligned with the call center business model, and that was the goal after all. So let me go back in here. Remember that the call center business model shown earlier, notice how adding just a few selected activities to the process flow now enables many more business, whoops, that was not what I wanted, excuse me. Yeah, how this enables us to get new opportunities in different areas. So just a few added activities to the process flow enables many more business workflows and services. And you can see these highlighted with the lines in red color, so it was not possible before. Including links to the service design and development, as well as performance and value or workload management. There are 5 new management aspects in total now covered by the call center with its new capabilities around those measurements. Now, that was a pretty quick glimpse of iGraphics and how we work with these topics, but it illustrates the improvements possible when you reconsider what you will do based on the changes you can do and thereby should do. I will now let Mark wrap up and elaborate on how this example relates to the concepts he introduced earlier. So back to Mark. Thank you.
Very good. Thank you, Stefan. Every one of us got a detailed feeling of how we could be modeling aspects of. So we saw here a simplistic example of a flow with specific activities that Stefan showed us, and how these activities could be. We did the link to strategy. We looked at what is the performance. We looked at scenarios. And we said, where is the transformation and the innovation potential? So we truly explored all the aspects here that said, here was cost. Here we have a value opportunity. Here we have a standardization opportunity. Here over we had an integration opportunity. We had furthermore a reporting opportunity, meaning cockpits and dashboards. So we truly used the full flow of integration within this specific scenario. And what I liked as well, and I do know that we are a little bit, at least we are 5 minutes over the time that we wanted to be, but we felt it is important to show you from top to end the possibility of integration, the possibility of what can an organization do. What you actually saw is that we improved the following business workflows: the service and design development, performance, value management, and the workload as well. So it is truly having integrated both a service and an information flow within these aspects of process modeling. I think this is very impressive. There's no questions that this is truly a tool that could be used for process modeling, business architecture, service renewal, and even aspects of enterprise architecture because of the information flows and aspects of aligning things. So, what are the main things that we believe you have learned today? We believe here are the main 6 points. There's always market changes. The business model needs to adapt. The question is, how is it you apply transformation and innovation? We need to understand the different drivers for change, if they are small, medium, or very strong, and the impact to the business model. Then which kind of business modeling principles do I apply? Is it service, value, revenue? Is it operating, performance, or cost? Or is it all? Or combinations of them, and in which way do I actually combine them? This is where we see, I guess this is one of the reasons that 76% of organizations fail. They actually know what they need to do, but they do not get the benefits from it. then the only way to really innovate and transform is by changing what you do. That means changes of your activities. So you will always end up in your processes. Don't think that you can actually only do a business architecture and that enables the change. Well, yeah, you do. But you still need to then do it in your processes. That's why we said you cannot only. It goes hand in hand. Can I do my information architecture without actually looking at my processes? Yes, you could do, but if you then fundamentally don't change what you do, meaning you have done a new information flow, but it doesn't change the siloed way that they actually report or work today, or the decisions they make, well, then it didn't really improve anything. It only automated it, which actually saves a little cost. In some cases, that's good enough. And then we try to introduce a way of thinking, a way of working around change, and not to question a way of modeling in the notations, which we went into very details. For some of you who would like these things that we presented, we are happy to share them. Again, from the leading practice community, we are an open source and open standard. And no, we don't sell anything because you cannot buy anything. We have absolutely nothing to sell from that perspective. So if you want to have some of those insights, we are happy to share. Just the way we did with iGraphics. And they added these modeling disciplines and principles into iGraphics. From this, I hand over to Linda. We are getting to the end where she's kind of summarized up, and then we have the open questions. Linda? Linda, we cannot hear you.
So, everyone, excellent, Mark. Thank you very much. As Mark already mentioned, we would be very happy to help you learn more about the concepts we've talked about and would like to share the material you just saw. And now we want to offer you also the opportunity to discuss your specific goals for innovation and transformation through a series of free workshops with your team, led by iGraphics and Professor Mark von Rosing. And if you are interested to go with us through these discussions, we want to offer you that you can contact us under the emails you can see on the screen. And through these workshops we will cover your challenges and desired results and propose recommended actions and their benefits to your business. And now I want to answer the questions that arise. So as I see, there are a few questions. First one is, how exactly could I use business modeling in the insurance sector? So maybe you, Mark, can answer this.
Yes, I would be happy to. I guess that would be a very normal common question is, how in the world do I really apply now business modeling principles? So we have, and by the way, with other sessions we have done, the typical person says, yeah, I have iGraphics, I love it, but how do I apply these principles right now from business modeling? First of all, if you happen to be a specific industry that is outside of banking or insurance, because the banking and insurance business model we can send to you, you can tailor it to your needs. This is something you typically would do together with your business architects or your business analysts. Tailor the business model, then it fits to what you have, and then you can apply the principle. All the modeling disciplines can then be directly applied to iGraphics. The competency you can actually write into iGraphics. The strategies you apply to it, you can directly put into iGraphics. This really goes hand in hand. So the answer is tailor the business model, meaning developing a business model that fits and represents the way you have it in your industry, then apply the principles which you saw below within it. saying with the organization, meaning the different executives, they will say, here we have this or we want that. And if it's not want-driven, meaning strategy-driven, then do it based on this is the opportunity we have or have identified. This is the basic answer of how to do it, at least the short one.
Thank you, Mark. So another question is, I read it, I like the information flow I just saw. How can I do that in iGraphics? And a similar question to this is, which version of iGraphics is required to do the modeling shown on screen? I think this is regarding the middle of the presentation where Stefan demonstrated modeling in iGraphics.
I think, yeah, that's a question for me. So it would be nice if you can hand over the screen one more time. So
yes,
I think it's best to show this. Okay. The information flow. Of course, we have possibilities here to also use the artifacts in the BPMN diagram to define where that is going from A to B. That's the easiest part. But if you want to later analyze how the flow really jumps not only within one diagram, but from process to process, we can do that with our objects. So as you can see here, there are objects available for these kind of artifacts. So for example, an invoice or the invoice data. Let me jump into the properties and go on the flow. So here we are able to see if an object is flowing. And here for the good, we have defined something. So from one process to another process. Now if I jump to this process object, you can see that it is here for that process model as an outgoing. The good is an outgoing work product going to this one. And if I jump to that process, you will see here as an incoming. So that is very easy to create a flow that does not have to follow the process flow as you usually see that in the diagrams. So that's the first question. And the second one was which version of iGraphics is capable to do that? Well, it's iGraphics 2013 I'm working in here, and it's the combination of diagramming tool, in that case Process 4 Enterprise Modeling, and our database repository system which is called iGraphics Process Central. So these both components are needed to do that.
Okay, thank you, Stefan. Another question is, what is in the workshops and how can I convince my team to do such a workshop?
I think, Mark, that is best answered by you.
Yeah, I'm happy to take that. I mean, the workshops we actually offered because we had lots of colleagues like you then contacting us and saying, how do I get started? I'm frustrated. I like what I saw. I've discussed with the business, and we don't, while we like it, we don't know how to get started. So the idea of the workshops is it's 2 times 1 hour. So we do 2 workshops, and it's web-based. The first one we spend 15 minutes saying, what's a little bit about the leading practice, and then a little bit introduction, you, us, blah, blah, blah. And then we kind of more discuss what's your challenge, what's your situation, what's your complication. Then the second one we actually already present, how would we go about it? What's a good way how to do the modeling within it? We offer this. This is actually our user groups, the banking user group and the insurance user group, who offer this, and this is the reasons we actually want to do this free, because this is the idea of the community of sharing. And in this case we do it with iGraphics because iGraphics is the newest member in the software tools and thereby has enabled all of these modeling disciplines. This is why we offer it. This is not to sell you anything. It is actually literally to enable you, how could you apply the principles. So this is how we would go about it, 2 times 1 hour, where we discuss your situation, your complications. Second time, how would we go about it? If it's then wished, we are willing to do a third workshop on site, half a day to 3/4 a day with your executives under the preconditions that your executives are there, and where you would pay the travel. You do not need to pay for our time. You do not need to pay for consulting. We come down. I say down because we come from the up Nordics, from Denmark. Actually, in Germany, they would maybe come up depending where you are. But we would come to you, but the travel we would say that you will pay, where we will take the cheapest way possible to obviously travel, not to burden anything of the costs. So that's the basics, and then we believe we have enabled you. We have done this with both hospital, healthcare systems, insurance organizations already around the world. So I guess that answered the question, Linda.
Yes, okay, thank you, Mark. So if there are no further questions, as I can see it at the moment, I want to thank again you for you joining, and Professor Mark von Rosing and Stefan for their really useful input. And we are looking forward to hearing from you and wish you an excellent day. And I would be very happy to welcome you in one of our further webinars. Thank you. Bye-bye.
All right. Thank you very much. Bye.
Thank you. Bye.